We are getting to the look ahead, the year ahead for Business Week 2016. Tell us, what's on tap?
Well, this is our third annual Year Ahead issue. We're doing it in conjunction with a conference. It's always a frightening task to predict the future, so our aim is just to give readers enough information so they can evaluate what they're doing as the year goes on.
What's interest rates has to be, I mean, here, all day, every day, we talk interest rate predictions. So David loves to point out, half of our guests say, who cares? And we go, everyone cares.
Let's talk about it some more.
Well, so we make some predictions on interest rates based on, the Bloomberg survey of economists. And some of it is sort of predictable. The idea is that U.S. rates will go up to 1.25% by the end of next year, although, of course, who knows when the Fed is actually going to raise rates. People are beginning to think instead of December, it might be March, but, of course, nobody knows. And then we have countries like China and India and Russia lowering rates as they try to stimulate their economy. I think the idea is that China will probably go to 4.20%, not a huge change, but again, trying to stimulate their economy. And the UK and the EU is probably going to hold pretty steady, not making money moves at all. UK will probably go up a little bit.
I know the next topic, number 2, matters to you.
Well, which is?
Apple's role in China.
So Apple has a complicated situation in China because just like in the U.S., a lot of people already have smartphones. So growth in smartphone shipments are supposed to go up maybe 1%. That's down from 20% last year. But Tim Cook still thinks it's a great market for them. He's still investing there. He thinks they'll continue to grow even as the market slows down. They're investing a lot in hiring engineers to create apps that are more focused on the Chinese market. They're planning to open more stores. I think they have 24 now. They hope to go to 40 by the end of the year. So he is completely doubling down on China.
So David, they're big already in China in their sales. How big can they get in China?
I think they can get a lot bigger in China. In China, Apple is sort of like a Balmain on steroids. They are a much higher fashion product than they are here. And as the middle class grows in China, and they're very luxury oriented, I think the iPhone is surprisingly well positioned in China, despite the fact that there are literally hundreds of Chinese clones of the iPhone. People in China still prefer Apple.
But there's a slowing of growth in China overall. We've seen and talked about it very much.
But there's also...
But is cell phone an exception to that rule?
I think it's an exception in part because the government's big focus is on consumption growth. So even though the economy may slow, the government's doing everything it can to push people to buy stuff. And I think the iPhone is one of the things they want to buy.
So it's not necessarily you think Apple has a complicated situation. The complicated situation is merely getting in with all of those consumers and that Apple love.
Apple's complicated situation is that they have to keep executing at extraordinary scale with the hardware, which is not easy.
Look at history. They're doing it.
They've done it well.
You got to give us number 3.
Number 3, we'll talk about EXXON. EXXON, incredibly successful company, faces a transition next year when they'll announce a successor to Rex Tillerson, who will retire in 2017. Obviously, they're dealing with lower oil prices and the prospect that oil prices are not going to go up a whole lot next year. And they have a choice to make between focusing on someone who is in charge of, pumping oil and focusing on someone who's in charge of refining. And their big problem is there isn't a whole lot more oil in the world to develop right now. They've been stalled in Russia because of sanctions, so it's a big challenge ahead for them.
That's a big company and a big job for somebody.
Without a doubt.
Bloomberg Business Week's Ellen Pollock, thank you so much for joining us.
Thank you.